Hi, and welcome to InfoSec Pros. I'm Kayne, Field CISO at Hyperproof, and I'm joined today by Joe Erle, Cyber Practice Leader and Cyber Insurance Broker at C3 Insurance. Welcome to the show, Joe.
Thank you. Thank you. I've been listening to the podcast. You guys have had some really overwhelmingly great guests, so I'm honored to be here.
Well, we're glad to have you on the show today. And because this is a live stream, if you're watching this on YouTube or if you're on LinkedIn and you've got a question for Joe or about C3 Insurance or about Hyperproof, please drop it in the comments on either LinkedIn or on YouTube, and we'll take those as we go. But just to get started and to kind of level set, Joe, tell me a little bit about what you do related to cybersecurity, AI, and cyber insurance.
Absolutely. So at C3, we are an insurance brokerage, and I run the cyber insurance part of it. We take clients through a 7-step process in order to make sure that they're prepared to buy insurance, and then help them choose which kind of insurance they need. I originally got into cyber insurance because I had been an insurance generalist for about 10 years before I started doing this 5 years ago. And I saw how much of an impact hacking has been happening, on my clients. Basically, we had a client that got hacked. He didn't have cyber insurance. He had to deal with it all himself. He had to negotiate with the hacker. It was a Kira ransomware group. They had locked him out of all of his files. They had information on his family, their tax information and everything, and they were doing a double extortion, of course, where they're threatening to leak it. And he had a time limit in order to, comply and pay him this money. So he was able to actually reduce the request from 250,000 to 115,000, but he still had to find a way to pay it, right? And they only take payment in Bitcoin. They don't take the good US dollar fiat currency. So he had to open a Coinbase account because he wasn't like a crypto guy. I mean, not a lot of business owners are. And when he put the money in there and tried to send it, his money got locked out. So he had $115,000 stuck in there. He had no way of getting it out. And he still couldn't pay this guy. So I was able to, that's when I kind of got approached by him. And we were able to set him up with a company called Digital Proof or Digital Wallet, and he was able to make the payment after getting some money out of Coinbase, and he got his system back up and running. But it just made me further appreciate what a cyber insurance company brings to you. They're bringing the breach counsel, the incident response, the forensic guys. They're helping you monitor credit if there's a information lost, and they'll even pay the ransom for you. Of course, it's your choice if you want to pay the ransom, but you'll have that backing of the insurance companies. So you can take a really bad day and make it more manageable, and it doesn't have to be as stressful as dealing with it all yourself and trying to figure it out.
Yeah, there's a lot to unpack there. I think the first thing to say really is that this is by no means an endorsement of paying cyber criminals or nation states for ransom at all. I think we're not endorsing that as a strategy. And I think the other thing that you've really touched on, Joe, is that cyber criminals have been really good at adapting to new technologies, to new sanctions. I was thinking of OFAC while you were talking, and Office Foreign Exchange, where you just don't want to get on their sanction list. Where
right, you could go to jail by paying the wrong hacker.
Exactly. And that provides, this is creating a lot of risk for businesses because criminals are really adapting quickly. So AI is definitely the thing that everybody's talking about in terms of ransomware, in terms of extortion. How do you personally see threat actors exploiting AI to undermine the ultimate effectiveness of cyber insurance policies? And then from an insurance perspective, how can insurers anticipate and counter tactics like that?
Yeah, AI is being used a lot right now. I was at a cybersecurity summit here in San Diego yesterday, and the entire summit, every talk was about AI. And AI attacks are much more ruthless and much more persistent than human attacks because it's being done by a computer. So it can be, um, you can be attacked like 1,000 times in a minute. So companies have to be prepared for that, and you really have to kind of fight AI with AI by hiring companies that have advanced cybersecurity technology in order to fight these guys. As far as like insurance companies, how they're using AI in underwriting. So they're doing scans on your website. They're using that with big data, understanding like what kind of threats are happening with which industries to help you know decide how much to charge you for insurance. And another thing they're doing is advanced threat detection. Most companies are have a cybersecurity arm of the insurance side where they'll give you advanced threat detection and also like help you. Uh, they'll be scanning the dark web and things like that, so that if there is some chatter about your company, they're going to be able to notify you.
So that sounds a lot more comprehensive because when you were talking about just scanning the website, I can think of a fairly well-known health insurance company that got wrecked last year. Not going to mention any names or about how they kind of ruined part of the economy, but their website security report was, I think, an A plus. Like they had a couple errors. They had an SSL certificate problem, which it was a minor one though. So if you just looked at that, you would have went, wow, that's like a really robust set of security controls, except for all information security and cybersecurity professionals know. Like your public website and your backend infrastructure are probably not, well, you hope they're not connected, honestly. I mean, I can think back in the day, back in the early 2000s, maybe. But I love that it's a more comprehensive view that you're giving because you are scanning the dark web. You are looking for additional chatter. But I want to ask, because we've had cyber insurance for a while now, Joe. And initially, when it came out, I had the feeling that the controls were sort of a wet finger in the wind by underwriters, where they didn't quite know what worked. But now I think there are some things that are known. So what types of controls are underwriters prioritizing when they're evaluating an organization for potential coverage? And have those changed in the past 5 years since you've got into the business?
Absolutely. Yeah. So in 2020, 2021, during COVID, there was a rush for everybody to go remote. And because it was a rush and people hadn't done it before, there was a lot of remote desktop access. There was a lot of uh, hacking through credential stuffing and lack of MFA, which caused ransomware to kind of spike. There was a doubling of ransomware during COVID. So companies had to react, of course, because they can't. They're public companies; they can't be losing money for their shareholders, and they were increasing pricing 40% to 100%, and they were they began to uh, check and ask more sternly about what kind of controls you had. And back then, it was like MFA was the uh, big thing because if someone has your credentials, that's one step. But if they don't have your access to your phone, then they can't get in, even if they want to. I mean, they can uh, ping your phone 1,000 times, and some people will stay authorized because they just want it to go away. But that's one big step that insurers have absolutely implemented. You still can get insurance without MFA, but it's you can only have the choice of like one or two companies out of like the 150 companies out there.
Okay.
The other five are the other four are MFA being the first one is they're checking backups because of course if you have backups, uh, there's less of a chance that you're going to have to pay a ransom because you can load from backups. They're checking email security, uh, you know, DMARC, email spoofing, that kind of thing. EDR was big last year. It's kind of become table stakes right now. EDR, MDR with a SOC looking over it 24/7, and now companies are looking for more employee awareness training
Hmm.
because they know like humans are the weakest link. I was listening to the CISO of Citibank yesterday at the conference, and she was saying that 98% of hacks were from uh, humans. Had the humans had some point of touching in the hack because we are the weakest link. So employee training is definitely something that you should be focusing on this year. And the other one that's a little bit more technical is the privileged access management, zero trust, that kind of thing. Insurers are looking a lot more at that, making sure that people are identified and they're checked throughout the system, because with AI and deep fakes and uh, the kind of new technologies that hackers have, it's just becoming more important to be able to identify not just the account but the person.
Well, I wrote, I took on my terrible handwriting here. I took a note with everything you just mentioned there for those controls, and I want to cycle on one that you mentioned, and then ask about one that you didn't mention. Really, with a focus on how we're assessing effectiveness of these. And there's a reminder on screen there. This is a live stream, so if you've got a question for Joe beyond what I just wrote down, go ahead and drop it in the chat on LinkedIn or on YouTube. Our producers will send it on over to me. We'll take those live. But Joe, you talked about EDR, MDR, and having a SOC as a security operations center for control that underwriters were looking for. And I'm struck by that because I remember last year there was a day that Delta Airlines and Southwest Airlines and Alaska Airlines and a whole bunch of airlines suddenly canceled all their flights, and a whole bunch of banks said, well, we can't give you any money today. And it was because a major EDR provider had gone dark. They'd had a bit of a bad time. They released a bad patch. It wasn't a cybersecurity incident, but it was certainly something that was material across a lot of companies. How does an insurance underwriter evaluate the risk associated with a company having an EDR solution where a bad patch could fundamentally take out their organization if they're not resilient, versus the value of having that EDR where you've got that continuous eyes on glass mentality, and are looking for unusual or anomalous traffic before it escalates?
Right. Yeah, insurance is cyber insurance does cover for widespread system failures. You have to look at the terms of your policy, but it doesn't have to be a hack. It could be incident like with CrowdStrike Falcon, where your computer system goes down due to uh, a technology vendor or even a vendor that's not non-technology. So keep that in mind, that insurance is not just for hackers. You could have a widespread event like what happened last year, and I think that insurers are looking at stuff like CrowdStrike and incidents similar to that. But I do think that they feel like this was a one-off, and that CrowdStrike and people have learned from this, hopefully,
Mhm.
and that the value of an EDR or an MDR is much more important than. I mean, it's worth it to have an incident like that every 10 years, um, so that you can be checking every endpoint. And I say every endpoint because uh, putting an EDR on just the network and the laptops, at the computer at the office is not enough. Every uh, device that touches the company network needs to be activated on that.
Okay, so they are still favoring EDR and taking that as just what's the term, a black swan event. So I want to ask about
Uh,
the
uh,
thing that you didn't mention there on your list of controls. And I was thinking when you were talking about when everybody went remote, everybody stood up, most companies stood up a whole bunch of VPN infrastructure, a whole bunch of firewall infrastructure, and some bright folks over at China bought all of those devices. They took them back to their labs and they started shelling them. And so for the past 5 years now, we've seen companies with exposed control planes at management interfaces getting nailed with 0 days, getting absolutely wrecked, and that's across telecom with something like Salt Typhoon, something like public utilities, which was Volt Typhoon. I don't know why they like the Typhoon name. And as well as public companies where you're buying this device, you're hoping it's going to protect your network. In fact, it's turns out that it's a cybersecurity product and might have, the thing about the cobbler's children who, they really don't have the best shoes. It turns out a lot of these enterprise cybersecurity products might not have the best security. What's the insurance thinking around these devices where we buy them to protect our network, we buy them to protect our traffic, and yet they might themselves be vulnerable devices?
Yeah, that's a great question. And companies are asking about your patching, like how often you're patching, and that can be one of the ways that you get discounts on your cybersecurity is showing them that you have a patching program or a third-party vendor that's helping you with that. There's also XDR companies that are looking for these 0 days so that uh, they can see that something's happening over here with their customers in Europe, and help you help patch that. You do like a temporary patch or lockout here in the U.S. As things happen in real time. But yeah, I mean, 0 days are a fact of life, but hackers are lazy and they are using the same tried and true methods of phishing emails and using exploits that are 10 years old for people that haven't, uh, you know, patched their system. I think there's still hackers out there using the Log4j JavaScript uh, vulnerability. So they're looking for the low hanging fruit. And unless your company is actually targeted, um, they're just scanning the web using AI and other scanning tools that maybe pen testers are using in order to find the low hanging fruit. They're looking for legacy software uh, and stuff like that. So I guess my answer to that is that the 0 days are already underwritten into the policy,
Hmm.
and we just have to do our best with those.
Okay. All right. I appreciate that. It's kind of a difficult question. It's something I talk with our CISOs about too. It's like, how do you defend against the security control when the security control itself is a potential vulnerability? Like at some point, you have to go, okay, this is an acceptable, tolerable risk. But I want to
Yeah,
go
and
back to something. Oh, go ahead.
uh, yeah,
Go
I
ahead.
I guess I guess it's a double edged sword too, because insurance companies, they're big publicly traded companies, and they like the big companies doing your cybersecurity, like Microsoft Defender and Sentinel One, and the big names. And it's actually the big names that are exploited the most because they know that most people are using them, the CrowdStrikes of the world, and that. So, using like a regional EDR might be advantageous because their exploits aren't targeted as much.
That is a really interesting perspective there. So potentially not going for whatever is in the Gartner's like can I say their thing that it's called? It's the square thing with four quadrants. There we go. And it's an up and to the right. You're saying maybe not choosing from that just because Gartner says so, but potentially going with a regional or a less well-known vendor just because there could be less systemic risk associated with that vendor.
Yeah, yeah, and I
Interesting.
also think that some of these large companies may be getting by on their name and less on their or performance.
Oh boy, there was an interesting conversation that I was part of, and it circled around whether or not a well-known vendor in the space could sell their cybersecurity products on their own, as opposed to being bundled with other products as part of their large licensing agreement. I don't think that there's a good answer there, but I think that that's something that a lot of CISOs are certainly starting to think about.
Yeah, I think I know which company you're talking about.
Yeah, yeah, they're a fairly well-known brand, but I don't want to name them by name for that conversation. But I want to go back to something else you'd said, Joe. And by the way, this is a live chat, so if you've got questions for Joe or I, please do drop them in the chat for us. I want to go back to something you said about using AI in underwriting, because I think you said that, right, Joe?
Yes.
Okay, cool. I wanted to make sure I wasn't hallucinating that because we know AI loves to hallucinate. Actually, my favorite term of the day is Jabberwocky. And a Jabberwocky in the context of AI is when you have it try to produce video and it produces something absolutely uh, cheese and crackers. It's just, out there. And what I wanted to ask about is you said you were looking at using AI in underwriting insurance policies. Can you tell us a little bit about how that works and maybe what controls are in place to prevent hallucinations associated with artificial intelligence?
Sure, and I think that when we use AI, we're using like it's a very big category. Um, I don't think that insurers are using LLMs per
I hope
se,
not.
uh, where we're getting a lot of hallucinations and stuff. They're mostly using big data and machine learning in order to look at their claims data, look at um, proprietary data out there, big data, and putting all that together in order to underwrite you based on your industry, your zip code, things like that. And I think there is some, I don't know, like the behind the scenes stuff what insurance companies are doing, but I know they do have uh, some governance on that to make sure they're not like discriminating too much against certain types of people. But
Mhm.
it's hard to know like exactly what's going on in there. But they're using it um, basically to take their actuarial data and extrapolate that into pricing correctly so that they can at least break even on the underwriting.
Okay, so they're not just YOLOing your insurance application into DeepSeek R1 and going, let's see what China thinks about this, right?
Right. So they're taking that data from your application, they're inputting it into this black box, which AI is a part of that, and that's spitting out a lot of the underwriting is done by that. And I think the companies that are just using AI, that's uh, they're going to spit out information that may or may not be right. But I think the companies that are having like real underwriters oversee the AI, and you know, with my clients, I usually am talking to an underwriter and making a case for them. Even if the AI says like it should be priced here, we can talk the underwriter about like what the additional things that the AI doesn't know about or that didn't go on the application that they're doing that makes this a safer client.
That's a really interesting perspective on how back of house insurance works because I know for a lot of folks, it feels like the entire thing is a black box. You send in your insurance application and then shrug, you get a number back. So thank you for unpacking some of the process of how the sausage is made. I want to switch to the other perspective because AI is something that a lot of companies are starting to adopt. And when I look at my list of things that you said that they were prioritizing MFA, backups, email security, EDR, and employee training. None of those really talk about the use of artificial intelligence, whether it's machine learning, with just a new name of AI, or whether it's full-scale LLMs. Are insurance providers starting to look at specific controls on AI? And are there any governance or risk management frameworks that they're actually starting to prioritize?
At this time, I don't think that they're really looking at like ISO 42001 right now, which is one of the newest AI governance certifications you could get. I think one your guest on the last episode was talking about that.
Yeah, Varun from BDO was talking about it. That was a banger of an episode too.
Yeah, that guy was super smart too. You should ask him about governance if you get a chance or listen to that episode. But I think for AI, as far as what companies are looking for, they're looking for acceptable use procedures that companies are using. Um, for companies that are actually creating AI or creating AI wrappers, They're looking at the application of that. Is it a medical application? Is it purely administrative? Are they working for the government? So that's going to change like how the AI is underwritten.
Hmm.
Um, and they're looking at what kind of controls they have in place as far as like uh, any type of AI governance that they're putting in place that so that they just want to know that you're not just like going going YOLO for it. They want to see something um,
And that seems to
for
be
some
really
kind of proof
the
that you're doing
these days.
something.
Yeah, yeah, absolutely. But it still sounds like you haven't got it down to that list of 5 things that just like if you're doing these things, you're probably doing okay, and if you're not, well, So it still
Yeah,
sounds a little.
they're still treating AI companies like software developers.
Okay, okay, interesting. There is a question in the chat as well, and it is timely. So I want to thank the audience. And again, if you've got questions, drop them in the chat. We will absolutely take these live. And the question is about AI's role in detecting cyber threats. Um, how are insurers evaluating the risks of AI powered fraud detection systems? So that's kind of an interesting question there. And whether or not those systems can themselves be exploited by attackers. So I think of that as being something like, you use your credit card online. I sometimes will back Kickstarters, and some of them are based in Europe. And inevitably, anytime I go to do that, my phone will ping and my bank will be like, hey, is this cool? Are you doing something? Because we can see you're clearly not in Europe. And it's a way of doing fraud detection. Now, I don't know if that's AI based or not. Um, but how are insurers handling those? And is there a risk here?
That's a good question. Uh, I would think that I don't know for sure. So this is kind of just me, my opinion is that insurance companies would like you to be using um, those types of fraud detection, especially in fintech and in the banking industry. Um, there's this one 7-Eleven down in Chula Vista that my wife uses that always sends me a fraud alert for some reason whenever she goes to it. I don't know why, but I have to do one for yes, and I do think that because of these fraud detection companies using these types of text messages and stuff, it does open people up for fake fraud detection messages.
Hmm.
And the amount of fake uh, messages you get, like I got one this morning from Apple, right, saying that my account had been breached, and there's a charge for $142, and you need to call this number right away, or go to like support.apple.com/ you're screwed in order to like fix it. So I think that companies are using that, and I think that these lists of exploits are out there. So like if you are part of the AT&T list, due to the AT&T lost 75 million people's records last year to hackers, and those lists are out there. So when you get a message from AT&T, they already know that you're using AT&T. So it's another form of social engineering that's a like a mass spear phishing type of event where you're going to start getting texts from all these guys. And there was the last couple weeks or last month, there was a huge one with the tolls in Southern California.
Oh,
Uh,
I remember that one. I'm not in California. I got hit with that one.
you guys, well, maybe it was nationwide, but like everybody goes through tolls, and everybody hates getting those big penalties, right? Like it's a $2 toll, but they charge you $50 if you don't pay on time. So
Hmm.
people are paying attention to those because they remember the last time they got totally screwed by the toll company. So yeah, these they can be taken advantage of by hackers for sure.
Okay. All right. Well, thank you. And there is actually another audience question. So again, I want to thank the audience. Keep dropping those in the chat or wherever it is on your device. Who knows? But it's related and about the risks of AI generated false positives and negatives in security alerts. And is that something that insurance companies or insurance providers are starting to think about here?
Absolutely, yeah. I There's a lot of false positives. Insurance companies are using companies like Security Scorecard. um, to rate companies. I know like one company like eRisk, they if you don't have an A score on security scorecard, like up to A, B, and C, or like green, yellow, red, then they won't even like insure you, or they'll non-renew you because you don't have an A score. And a
Oh,
lot of times they are false positives. They're ports that are open that don't matter, or stuff that maybe was fixed, or maybe aren't a part of that person's network anymore, that still comes up on the scan. So yeah, we have to address those at the time, and the IT department does have to do a little work to prove that that was a nothing burger.
nothing burger. Love the term. Something else I want to pivot the conversation to be around is around regulatory enforcement associated with cybersecurity and also under AI. Because we've seen in the past few years, regulation tends to and lawmaking tends to follow big events that happen in cybersecurity, where the regulators, I have the sense, for the past few years have just been sick of these data breaches, and they're like, we're going to make that a law. We're going to make that a regulation. We're going to force companies to behave in a given way, like the SEC's cybersecurity disclosure rule, or the new disclosure timelines under NIS 2 in the EU, or there's just I could go on, but there's a continuing variety of these. The one that's for mortgage brokers in the United States is particularly comedy gold because it's like 24 hours. Um, is that something that insurers are starting to factor in to pricing models, or to factor into how they're evaluating organizations by, I don't know, looking at their regulatory disclosures, their 10K or their 8Ks? Is that something that they're using to enrich, or is this control enforcement from regulators, is that affecting the insurance market at all?
Yes, because insurance companies are paying attention, especially like wrongful collection type lawsuits. I think in Illinois, they put in a BIPA lawsuit that like Disneyland and some other companies got hit pretty hard on, where they were charging $1,000 per record of wrongfully collected biometrics. So companies are responding in a couple different ways. They want to know how you're collecting data. They also are either excluding or completely those wrongful collection, or they're adding sublimits, which are like little limits. So like they'll say you get like 100,000 in coverage instead of the full million.
Hmm.
Uh, so they're reducing their risk by adding those sublimits or excluding it all the way. We like to, of course, find companies that are giving the most broadest coverage and will cover for that kind of thing. But yeah, they are putting that in there. They're looking at terms of service. They're asking people what kind of information they're keeping and how long they're keeping it and why they're keeping it. If it's sensitive information, they'll have follow up questions on that. Um,
Okay. And I want to go back to this one as well, because I'm thinking of AI systems, because that definitely is an influence in the whole supply chain of, like, if you've got an AI and you've collected some information and you send it to the AI, who really knows where it goes in AI world because of processors, sub-processors, and so forth. Um, how are insurers thinking about, like, the complicated supply chain today, or use of high risk applications of AI? How are they quantifying liability exposure?
that's a really good question. Uh, I think that they're not. I don't think that they're putting that into the equation yet.
Okay, so it's still kind
They
of
may ask
new.
for like an acceptable use policy, but I haven't seen that yet even. So
Okay, well, what about cases where they're, I don't know, they're, I kind of have the sense that OpenAI might be like the new AWS, where you just, it's like on the old Scooby Doo episodes where you'd pull off the villain's mask and it was inevitably AWS or OpenAI just under there. Um, how are insurers thinking about companies that are literally just reskinning or, in some cases, modifying foundational AI models when it comes to potential exposures or how they can provide adequate coverage to those?
Yeah, I think there was a case with Alaskan Airlines with a bereavement. Uh, correct me, correct me if I'm wrong with the fact checkers, but there was a bereavement case where the AI had charged the person extra, um, or charged a number of people extra because they were, and the the airline tried to blame the AI and the software company that helped them build the AI, and the judge said no, um, that's not the AI. It's you because you're the one that customized it for your company. So I think the law is going towards like the last person that customized it. If it's your face on it, then it's your AI and you're responsible for it. And the insurer would step in your toes and defend you for something like that.
Okay. And kind of as a follow-on question, just thinking of another court case. So companies have got cyber insurance, right? I mean, they've got their normal insurance too, right? They've got liability insurance, they've got other business coverage insurance, they've got cyber insurance, they've got D&O insurance. What makes me think of that is you were mentioning a court case, and there's a court case I looked at of Alaska earlier this week where they didn't have cyber insurance and they decided they'd try to apply their D&O insurance to a phishing attack that cost them $2 million. And then they realized, oh no, this is probably a bad idea to sue our insurer. This is not going to go anywhere. So they politely walked back. But we've got these varying types of insurance. But is there like an AI insurance in the mix? Is that something that's coming down the pike where companies could buy specialized coverage to address any risks that are unique to AI? And that could be mostly like you said, like an AI making stuff up. Well, I think Air Canada had a similar case where they came up with a refund policy that didn't exist, but the AI said, "Yeah, no, that's totally a thing, and you can totally leverage that." So that's one risk associated with AI, but also the I don't know what happens if like the corruption of the training data gets nuked or if the code starts going squirrely. Like, are we going to see insurance policies specific to AI as well?
Yeah, I think that you will. Yeah, AI can get poisoned by poison data. There's people on Reddit right now like writing fake answers um, to screw with AI just because like that's what they do for fun. Um, shout out to all the redditors out there. Uh, quite the community. Definitely fun to watch the responses. And there are some unique products and endorsements to insurance policies for AI companies. One of the more creative insurance products I've seen is one where if the AI company's code gets corrupted, or they have to rewrite it because of some kind of poisoning or some kind of issue, the insurance company will actually pay for the man hours to rewrite it. So there are some
Wow.
really unique coverages out there for AI companies right now. Mentioning AI by name is kind of a double-edged sword, I think, because it further defines AI, where insurance companies right now can already put AI in the basket with like computer programming and things like that.
Hmm.
So without defining AI, it almost makes your policy broader because it uh, it doesn't reduce the definition of AI to like a certain kind of thing.
Okay, but you said that they would pay potentially for the person hours associated with an AI. I heard you right, right?
Right, right. If that's
Okay, so
the
I wanted
company's
to
main
double
business,
click on that
yeah,
one there. So you're saying that you could be an AI provider, your code base gets corrupted for some reason you don't have backups of your code, which sounds sus. You're saying that without any limits, they'd pay for you to redevelop the whole thing? Like some of these AI systems probably take more than a couple days to write.
right. And it wouldn't be without limits. It would be the limit of the insurance policy.
Okay.
It
All
would
right.
be
So there
covered under
are upper
the
limits.
right, right. So if you had $1 million limit, that's the most they're going to pay. But it'd be part of the technology errors and emissions part of your cyber policy.
Hmm.
So like that's the AI providing AI is as a service, right? So the insurance company is covering your service. So if that service gets corrupted or causes somebody else a loss, and you have to rewrite it in order to make it so that loss doesn't happen again, the insurance company could pay for that. Correct.
Okay, thank you. I just wanted to be clear on that one before people started saying, "Yeah, the dog totally ate my homework," and pay up, because that obviously is not a good. That
Yeah,
could
and I
become a
wanted to jump
systemic
in
problem.
and address one thing that you had said about directors and officers,
Hmm.
because that is a problem right now. Is that because companies and during COVID were using directors and officers to cover their cyber um, breaches and things like that, insurance companies put total cyber exclusions on their directors and officers policy. So if a decision that came from a cyber event was made by the management and they got sued by their shareholders or stakeholders, that wouldn't be covered at all. So you need to look at your directors and officers policy and make sure there's not a total cyber exclusion, because that it's just not really fair. Because when you have a cyber event, you're going to have to make some important decisions, like whether to pay the ransom, right? Like look at MGM and Caesars, right? Like MGM decided not to pay the ransom. It ended up costing them over $100 million. uh, maybe like 500 million when you count like loss of reputation and all the back end stuff. But Caesars paid the 22 million, right? And then they were back and running the next day. So you could argue that the management made the wrong decision, and that could be a directors and officers lawsuit from MGM's shareholders. So if they have a total cyber exclusion on there, that's not going to be covered at all.
That's a good point. And if people in the audience want more examples of D&O insurance, that's kind of a soft spot for me. Subscribe to my newsletter on LinkedIn, or alternatively, just find me on LinkedIn. Go back to, I think, Monday or Tuesday of this week, and you'll find an article there about a cyber exclusion clause in Alaska about fishing. But I want to go to an audience question, and I want to shout out John. Thank you for the questions today. This one's related to something when we were talking about security scorecard, where you were talking about that, and those metrics playing a factor in insurance pricing decisions and underwriting decisions. And the question is if GRC, governance, risk, and compliance technology, helps companies get more favorable terms with cyber insurance companies.
I think it's a factor. I am seeing on cyber insurance applications what GRC, what types of certifications that you're having, because insurance companies know, like, if you have this certification, like, you're doing certain things, right? So I definitely think it's a factor and it helps. And if the insurance company is not asking about that, then it's something that you should volunteer, because it's showing that you're above average in your industry.
Fantastic. Well, I appreciate that. And as we move to wrap up, because we usually go for about 45 minutes on these, Joe, I think you're also fairly active on social media. Where could people find you and also listen to your podcast?
Oh, great, great. Thank you. I'm on LinkedIn under Joseph Earl. I'm also on Instagram and TikTok under It's Cyber Joe. And my podcast is I have a cybersecurity podcast. We just riff on current events, old hacks. It's called Ransomware Rewind. Um, we have some interesting guests, and we chop it up on there. It's pretty fun. So if you have a chance, check that out too. Ransomware Rewind.
That's fantastic, Joe. I hope that that has people being more kind in ransomware when they rewind.
Right? Be kind, rewind. Yeah, that's where we
Yeah,
got it. Yeah,
exactly. Yeah,
you
no,
got it
that's
right there.
a accidental mug that I happen to have here from my old
Oh,
podcast
nice,
studio. Heck
nice.
yeah.
Love
All
it.
right, cool. Well, I want to thank you for being on the show today, Joe. And if you're watching this and if you know somebody who we should have on the show, or alternatively, if you're that person who should be on the show, drop a note on in the comments or just DM me on LinkedIn. With that, Joe, I really want to thank you for sharing your expertise and your knowledge about cyber insurance and cybersecurity. I want to thank you for joining us, and I want to thank our audience again for tuning in to today's live stream. Thanks, everyone.
Thanks.